If you're live trading cryptocurrencies like XRP, Ethereum, Chainlink, Floki, or own any other altcoins in the space, the Federal Reserve with Jerome Powell is about to come out in the FOMC meeting in 8 days and 18 hours and give a speech about interest rates. And there's an 89% expectations of a rate cut. Now, the Fed just completely ended the bond market. And in this video, we're going to discuss the 2-year yield to the 10-year yield and the inversion that is taking place right now and why this leads to a recession and what you need to be ready for. With the golden cross that's taking place right now on this yield curve inversion. And we're going to discuss how this affects the crypto market, specifically Bitcoin's dominance. We're going to talk about Ethereum to Bitcoin's price chart. We're going to discuss XRP's price chart. We're going to compare every altcoin underneath Ethereum to Ethereum and what's expected to happen in the short term. We're going to talk about Chainlink's price chart. We're also going to discuss Floki compared to Bitcoin and what to be ready for on everything outside of the top 10 for when alt season truly kicks off. That way you guys can make the most amount of money possible before the end of the year. So if you're feeling bullish, comment 777. If you're feeling blessed, comment 777. And as always, if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So over the past day, we're seeing a nice bounce in the crypto market. A lot of these projects are making major trend reversals. So I want you guys to plug in with our free Discord group through the link in the description below. We got about 748 members. Let's get this over 1,000 members. We're posting trade setups in here that you guys can tap into before we talk about them on YouTube. So this is where we're going to be more active and it's free to join. So if you guys want to network, connect with other members in the community outside of the YouTube spam comments, then that's the place to do it. Let's dive right in and let's talk about what's taking place because September 17th, the Fed is going to be cutting rates. October 29th is the next meeting. The Fed is most likely to cut rates again. December 10th, the Fed is likely to be cutting rates back to back rate cuts. Now, unless Jerome Powell comes out and says something different, we are expecting rates to go down. And so when the Fed lowers interest rates, it generally puts downward pressure on U.S. Treasury yields, including the 10-year and the 2-year bond yields. But the relationship is not always straightforward and it depends on various factors like GDP, inflation, unemployment, you name it. But to put this simply for you, a cut in the effective federal funds rate, which is the main rate that affects every other rate, it influences short-term interest rates. And so it leads to a decline in short-term yields like the 2-year Treasury note because these are more closely tied to monetary policy expectations, whereas the 10-year Treasury yield is influenced by long-term factors like inflation expectations, economic growth forecasts, and market sentiment. So while a Fed rate cut can push the 10-year yield lower by signaling looser monetary policy, it's not as drastic as the 2-year yield. And when we look at the 2-year yield, we can see all the way back here to the high of October of 2023, we're down about 33%. Whereas if we compare to the 10-year yield and we measure from the high, we're only down about 20%. So what this creates is a yield curve inversion when the 10-year is less than the 2-year. And now we see that the 2-year is at 3.4 and it's less than the 10-year. So that's where we've seen this yield curve go back into positive territory. Now we've seen this happen a few times in the past, although we did just get out of the steepest yield curve inversion pretty much in history, other than all the way back here in 1980s. You know, every single other yield curve before this time, going back to 1989, wasn't as steep. And each time we got out of a yield curve inversion, we went into a recession. So it's not a matter of if a recession will hit, it's a matter of when will this happen. And my expectation would be sometime in 2026 for this to take place, or the very tail end of 2025. So we're really close. And if we look here, you guys can see on both of these charts, a major bearish divergence has been playing out since April of 2022, where we've seen higher highs on the price chart and we've seen lower highs on the relative strength index. So momentum on the relative strength index is bearish, and now the price chart is catching up with that, forming lower highs. So with the Fed dropping interest rates and the 2-year yield right here for bond yields right at this key zone of support, a likely scenario is for the 2-year and the 10-year to drop even lower. Now, if the 2-year continues to drop faster than the 10-year, then what that means is this yield curve inversion will continue going up because the 2-year will drop significantly quicker than the 10-year. Like I just mentioned, when the Fed adjusts interest rates, the 2-year gets hit harder. So the 10-year is lagging behind. You can see the 200 SMA on both of these charts here. The 2-year is already at the 200 SMA, whereas the 10-year is still above it. So the 10-year has further to the downside to go. And this is just the tip of the iceberg. So when I say the Fed ended the bond market because they're now expected to lower interest rates 3 times in a row, will lower bond yields reduce the attractiveness of treasuries compared to things like stocks or even cryptocurrencies, as the opportunity cost of holding riskier assets decreases. Investors are going to seek higher returns in equities, particularly in growth stocks or dividend-paying stocks. And lower yields also reduce the opportunity cost of holding non-yielding assets like gold. So additionally, if yields drop and they're driven by economic uncertainty or dovish Fed policy, which is the anticipation of rate cuts, gold becomes a hedge against uncertainty or potential inflation. That's why we're seeing gold take off to new all-time highs. Now, lower yields also drive capital flows to emerging markets like the crypto market, because as bond prices rise, yields drop, so yields just become less favorable. So we're going to see a great capital rotation here over to the crypto market. And you stack this on top of a golden cross that's taking place right now for the US 10-year to 2-year, and you compare this back to the past. The last time that we had a golden cross when the 200 SMA crossed below the 50 SMA was back here in May of 2020, before the market absolutely erupted to the upside during that bull run. The time before then, well, the crypto market wasn't really doing anything because we just don't have enough data since crypto's that new. But this was during 2008. Then the stock market crashed shortly after that. Then in 2001, the stock market crashed shortly after that. So don't get me wrong, this is bullish for crypto in the short term. But when we finally see this start to spike up and we see the 2-year breaking below this support and just free falling to the downside, like we've seen multiple times in the past, when this starts to take place, well, this is not going to end well for the bond market and the overall economy, because a lot of people that are just holding cash are going to get absolutely wrecked once we finally get up here and a recession gets marked in. So what can you do to prepare, and why does this matter for you? Well, the last time that we saw this drastic spike in this chart right here was right around the exact same time that Bitcoin's dominance fell off of a shelf and dropped from 60+% all the way down to 39%. And at this stage, by May of 2021, we were all the way up here above 10% on the 10-year to 2-year yield curve inversion right here. So we went through this golden cross down here. We saw this massive spike in the 10-year to 2-year, all simultaneously while Bitcoin's dominance was falling off of a shelf down here after topping out in December of 2020. Now, what's interesting, by December of 2020, we were already right here after experiencing this golden cross, and then this final push up above 10 to 12%. That's when Bitcoin's dominance really started to, drop to the downside. But before then was the build-up phase. So what we've been going through right here is really the build-up phase. If I zoom in here, you can see since March of 2023, since July of 2023, we've just been forming higher lows on the 10-year to 2-year, and we've been building up to this golden cross to where eventually something's going to happen here. And simultaneously stack that on top of the Federal Reserve keeping rates paused for over a year, and now they're going to finally start cutting rates. This is just too coincidental of timing here as we get into the tail end of the 4-year market cycle theory. And so based on this, we're going to dive into more detail here on the charts and what we see for confluence here, because looking at Bitcoin's dominance on the monthly chart, you can see based on the MACD, we're experiencing a bearish cross all the way up here. The relative strength index also topped out at 73, and Bitcoin is just sitting right here at the 21-week EMA as support. And so even with a short-term bounce for Bitcoin, I'm expecting this to roll over to the downside. Now, when we look at something like Ethereum to Bitcoin, then we'll dive into XRP, and then we'll dive into other altcoins as well. So let's look at this and let's talk about what we see on the stochastic RSI, because we see Ethereum breaking out relative to Bitcoin the last bull run cycle several times before we experienced the top for Ethereum. And each time we saw these short-term rallies for Ethereum, it was met with bearish crosses close to 100 on the stochastic RSI in overbought conditions. So Ethereum would outperform Bitcoin during these rallies. And then once we got into overbought conditions on the stochastic RSI, we'd experience bearish crosses up here. Now, why is this important? Well, pay close attention. I'll share with you why it's important in a little bit, because if you were to spot this on the chart, especially the weekly chart, this would have given you a better understanding of when is the best time to rotate out of Ethereum and either into Bitcoin or into other altcoins, based on what I'm going to share with you in a little bit. Because look at what's happening on the chart right now. Well, we just experienced a bearish cross up here at 97 after Ethereum has experienced this short-term rally. And also the relative strength index right here is pulling back from overbought conditions. So what does this mean? Well, because we've been overbought for an extended period of time for Ethereum, the most likely scenario, it doesn't mean that it's guaranteed here because obviously it's crypto, nothing's guaranteed, but this is just based on data and what we're seeing on the charts. The most likely scenario is for Ethereum to pull back relative to Bitcoin in the short term, similar to what happened each time during these pullback phases like this before we experience a bounce. Now, this doesn't mean Ethereum's bull run is done. In fact, I think we have much higher to go, but I think in the short term, we need to see the stochastic RSI resetting, at 50 or below 50 on these pullbacks, like what happened each time we experience these pullbacks for Ethereum. We need to come down further. And that would just mean capital would rotate out of Ethereum, or Ethereum just goes sideways in price and Bitcoin goes up in price, or Ethereum can still sell off, but Bitcoin just sells off less. So Bitcoin would outperform Ethereum. So in my previous video, I talked about why investors are saying that now's the best time to buy Ethereum. Well, those investors, in my opinion, it's not that they don't know what they're talking about, because they might be thinking about like over the next 3 months or 6 months, but in the short term, on a day-to-day basis, it's not the best time to buy Ethereum, simply because of this right here. This is just not smart investing. This is impulsive investing or emotional investing. You need to look at logic here. So I do think Ethereum is going to experience a bounce, but we need to watch for this pullback relative to Bitcoin. Now, I talked about this in the most recent accelerator call inside of Altcoin Pro. And if you guys want to learn how to read charts in your own time, you can click the link below, go to the classroom right here, scroll down to where it says Technical Analysis Essentials, and go through this entire classroom section right here. This will be the number one place that you start. This helped me become a way better trader, way better at technical analysis, to truly understand what I'm looking at on the charts. And had I not, gone through this and understood what I'm looking at, I would not know how to, spot the best entry points or the best exit points in the market and be in the crypto market as long as I am. So definitely check that out. Go watch this 13-minute video right here after this one. It explains what else offered in here. And we have a 14-day money back guarantee. It's only $97, really cheap. If you can't afford $97, then you need this more than anyone. You shouldn't even be blinking at stuff like this. This is just a no-brainer for everything that's included. So go check it out. I know you guys are going to absolutely love it. Over 6,800 people that have commented on our welcome post. A lot of those are repeat comments, obviously, but we got around 1,000 members right now. Now let's dive into other altcoins here and let's talk about what's taking place, because on the right-hand side of the screen is the chart that I just showed you. It's ETH to Bitcoin. We see a bearish cross right here above 80 and even close to 100 on the stochastic RSI. The relative strength index is pulling back. But on the left-hand side of the screen, we can see total 3 compared to Ethereum. This is everything other than Bitcoin and Ethereum compared to Ethereum. So this is pretty much XRP, this is Chainlink, this is Sui, this is Ondo, this is Floki, this is Dogecoin, this is you name it. Any other altcoin that's in the top 10 and outside. So Ethereum right now experiencing this bearish cross near 100 on the stochastic, pulling back on the RSI. Well, we just experienced a bullish cross down here after seeing a major sell-off relative to Ethereum. So Ethereum's been absorbing a lot of liquidity, and I think that's going to change. I think we're going to bounce to the upside, and we'll see the stochastic RSI come back up into overbought conditions. Now, I've been making these predictions time and time again, and I'm not right on all of them, but this one is one of the easiest ones that I've ever seen. Look at the relative strength index right here. We were sitting at 28 when that bullish cross happened, and now we're at 37. We're just bouncing to the upside. Now, sure, we could, go sideways for a little bit on the RSI before continuing higher, but I think we're going to continue higher while the stochastic RSI for Ethereum to Bitcoin's price chart resets a little bit, and we see some type of, bull flag right here, similar to what we saw right here, or if we go back here, similar to these falling wedges like this before Ethereum continues to the upside. And after we see a reset down here or close to 30 like this each time in the past, then we see the stochastic RSI bounce back to the upside for Ethereum to Bitcoin. And then we see, money rotate back out from other altcoins. Okay. So this is the game that we're playing here. And when you guys can understand this, where the capital is about to rotate to next. So this is why I am more bullish on other altcoins other than Ethereum. Why? Well, Ethereum's had its initial run right here. Now it's time for Ethereum to cool off before it has another run to the upside. So therefore, we're going to look at other altcoins, one of which being XRP. Because Ripple has tier 1 banks as partners, well, XRP will be classified as a tier 1 asset by the Bank for International Settlements. So it'll be alongside gold. Now, most XRP holders are not ready for what's coming for XRP. And a lot of people that don't truly understand XRP, just look at it and be like, oh, XRP's been selling off, and they don't even see what just happened recently. We just experienced a major break of this downtrend right here, and XRP is at the first stage of a major trend reversal. So now a downtrend, you guys understand this, is a series of lower highs and lower lows. XRP has been in a downtrend since, the July of 2025, the 21st. This is just a lower high, lower high, lower high. We see lower low right here, just lower highs, lower highs. Now what's happened is we are attempting to put in we just did put in a higher high than this high right here. Now what we need to see is a higher low. So if XRP pulls back, it could go sideways, it could go down. It doesn't matter. As long as we put in a higher low than this low right here, then we will still be intact for a potential macro trend reversal. The real goal here is to clear $3.10. If we clear $3.10 and we see XRP do something like this, it's game over at this point. We're now in a major uptrend, and we would expect XRP to go back to retest the all-time high. 310 is the major level to clear for XRP. Now, if we were to zoom in, because we're on the hourly chart right here, it doesn't mean that XRP can't pull back in the short term. Even if we go into the 15-minute chart, I've been talking a lot about bullish and bearish divergences, and we're seeing the start of a bearish divergence here. Now, it doesn't mean that, we sell off quick to the downside right now, because once we see a higher high on the price chart, like what we just saw recently with this breakout up to about $3, and a lower high on the relative strength index, well, we could still experience, boom, another breakout like this for XRP for another higher high, and the RSI just puts in another lower high before we consolidate, again, like that. Ultimately, the main thing that I'm looking at is for XRP to continue this uptrend, and when it does pull back, for the pullback to be a higher low than these lows right here and this low right here, because now we are in an uptrend. So we're basically starting a bullish channel, right? And you could put the parallel channel here if you want, draw it like this, connect the points right there, and you guys will see where the next resistance will be to the upside at the upper echelon of this channel. And so this is what I would expect now for XRP to just range within this channel while we break back out to $3.10. So it doesn't matter, in my opinion, what happens in the short term. What matters is the long-term outlook on the market. Now, if you guys want to, catch better entry points, then definitely go through the accelerator calls in the classroom. Watch when I talk in detail about the divergences, and you can go through the PDF where I broke down every single step of the way and how to be able to understand these markets better. This is a 50 plus page document showing these, breaking it down in detail. And each of these calls was like 2 hours. Yeah, this call was 2 hours long. The last one that I did was like 2 hours and 30 minutes. So I go into depth with you guys. That's why Altcoin Pro is there. It's to help you guys better understand this. So go into calendar, attend every single call here for only $97. And then if you're ready to join the accelerator program, we may open the doors here soon in the future. Again, I'm not going to guarantee anything right now because the doors are closed, but we only allowed 30 people in, and you guys can apply now. Join the wait list by going to accelerator.altcoinpro.com if you want. Just put in your name, email, phone number. Anyways, let's get back to the video. I just think it's really important that you guys educate yourself, and we're there to help you out every step of the way. Because looking at other altcoins, outside of XRP, like Chainlink, well, Grayscale just filed an ETF with the SEC to launch a Chainlink, ETF. So the filing would upgrade the existing Grayscale Chainlink Trust, GLNK, 28 million assets under management, into an ETF. So it's the second filing in recent weeks for a Link ETF following the Bitwise S1 in August. So they're preparing for something. Why would these companies be filing for ETFs if they're not preparing to get them approved at the top of the market to take retail's money, right? That's their goal. They just want to take your money at the top of the market. And then if they're going to dump, leading into the recession, well, then that's someone else's problem, okay? There's winners and losers in this market. And because you guys are watching this channel, you guys are going to be the winners because you're getting a jump on the gun here. So if we look at Chainlink, Chainlink right now has experienced, a higher high in the price chart. We do see a lower high in the relative strength index. So it's setting up a bearish divergence. Now, it doesn't mean that the bearish divergence is done. As I've shown you on Bitcoin's dominance on the weekly chart in the past on how long a bearish divergence can continue. But I think Chainlink is gearing up for another major move after this short-term dip is done right here. And it could arguably be done like pretty soon because we can see this falling wedge, lower highs, lower lows right now. We're just starting to break out of it. So maybe Chainlink does another lower low and then we start to work our way out of here. Regardless of whatever this looks like, or we just start the breakout right now, I do think Chainlink is going to make another major move back to $30. We're at $23, and then inevitably the all-time high right up here, up at $50. And I don't think Chainlink is stopping just there this bull run. I think we're going to see these aggressive moves by the end of this bull run cycle, and that's why these institutions are preparing for ETFs, because we're still down here. We're still at these levels. We're back testing previous highs that we were at in March of 2024 as support right now. So this is acting as the launch pad for Chainlink before we make another major move to the upside. So if we zoom in even closer, on the price chart for Chainlink here, you guys can see that we've been in a downtrend since the 22nd of August. So if I were to measure here, roughly about 17 days. And the main thing that you want to look for a trend reversal is a clearing of a previous swing high. So that would be right here. This is what I want to see for Chainlink to clear at about $24. If we don't clear that, then we're just still in a downtrend, right? Because we could get rejected from here. We could come down, put in a lower low, and then start working our way out of here. It's only when we clear this and put in a higher high for Chainlink and then a higher low like this that we start a much more macro trend reversal. So just be patient with Chainlink here and just watch this key level, because it's a safer play to wait for a breakout of a previous swing high to confirm a trend reversal. Otherwise, if you're just buying in, to something right now and we continue lower for another lower low in this falling wedge before we finally break to the upside, then you're not getting, confirmation that a trend reversal is going to take place. And hey, if we even go even lower than that, you need to watch for this. So that's why the bullish divergences are what we look for on the opposite end of the spectrum here. And so zooming in to Chainlink's chart right here, you guys can see this bullish divergence from the lowest low on the relative strength index down here, well below 20, and a higher low on the relative strength index, or a higher low on the RSI, lower low on the price chart. There's a bullish divergence. And so now we're just watching for a trend reversal and confirmation. So this key level that we're at right now, the next one is $24 right here. And so I would just expect Chainlink to consolidate for a little bit like this before pushing up higher to this resistance and then eventually breaking it. So as we work our way through this range right here, look at the relative strength index. Now we're putting in higher lows and the price chart's putting in higher lows. So I just expect the RSI to come down a little bit further like this and then bounce to the upside. This is what I would see on Chainlink's chart. Now, could I be wrong? Absolutely. But I think the low could be in right here because of this bullish divergence and how the RSI was oversold all the way down here. And now we've bounced off of this low, and look at the RSI now trending back above 50. So extremely bullish for Chainlink. I think it's going to do very well leading into the tail end of this year. Now let's look at Floki and let's compare it to Bitcoin's price chart, because going back to November 2021 to the bottom for Bitcoin and also bringing up the MACD, what we saw here was a couple bearish crosses on Bitcoin's price chart, but the biggest one was all the way up here when Bitcoin topped out at about $63,000, and we saw this A, B, C corrective wave all the way to the bottom. And so on Floki's chart, what did we see? Pretty much the same thing. We saw a bearish cross all the way up here, momentum shift from bullish. We topped out right before then. So usually we see the top come in, then we see a bearish cross happen, and then we see an A, B, C corrective wave. Now, if the bottom's in for Floki, or if we have one more low, like what happened here for Bitcoin, you can see it really depends. We'll see based on if there's an aggressive pullback based on Jerome Powell's speech over the next few days. So just be careful here. But watch Bitcoin. Look on the right-hand bottom of the screen. When we experienced a bullish cross down here on the MACD, when we were in drastically oversold conditions, we saw Bitcoin experience this bounce, one final sell-off capitulation to the bottom. And this now was a bullish divergence where we had a lower low on the price chart, and then we had a higher low on the MACD. And I bet if I brought up the relative strength index or the stochastic RSI, we would have a higher low as well too. In fact, let's just bring it up right now. Let's show you what it looks like. Yep, we did. Look at that. We had the lowest low on the RSI down here, and then we had a higher low on the RSI as we were breaking out from this bottom right here. And so on Floki's price chart, let's bring up the relative strength index and let's show you what we see right here. Now, we are not experiencing a higher low on Floki's price chart, so there could potentially be a lower low from this point right here if we get rejected from this resistance that we're at right now. Kind of like how Bitcoin got rejected right here. That's a possibility. If we do put in a lower low, watch the relative strength index, watch the MACD, because once a bullish cross takes place, it takes a little bit of time to get out of here. But once we start building momentum out of a downtrend, like what happened for Bitcoin right here when we broke this descending resistance on the 9th of January, we come back up, we consolidate at it, and then we break resistance, we break a previous high, and then we just put in a higher low. So we just put in higher lows and a higher high for a major trend reversal. And then this trend reversal is what sent Bitcoin all the way up here to the previous high. So I think this is what's going to happen for Floki once we finally see what I'm going to share with you in a little bit towards the end of this video. So hang tight. It all comes full circle here, because once the low is finally in, if it's not yet in already, it might be in, because these charts don't look exactly the same, right? Like look at Bitcoin's B wave. So A, B, it was above the previous high, whereas Floki's B wave is below the previous high, but we are in a falling wedge. So the low might be in. We don't have to do exactly what I just shared with you on Bitcoin's price chart. But if we do experience a lower low, then I think that'd be the lowest low for Floki for us to then finally start to work our way through here and eventually break back out to the previous high to come back up here and do what Bitcoin did, like this. And then we'd see the MACD rotate back around into positive territory, just like what happened all the way back here for Bitcoin, because we're in drastically oversold conditions. So this is incredible. It's good to look for entry points on these breakouts and these back tests like this, kind of like what happened here for Bitcoin or what happened here for Bitcoin before we really explode to the upside. And the reason why I say that is because of what's happening on the others chart right now. If you look at everything outside the top 10, which Floki falls in that category, and there's tons of other altcoins that do too, that we'll talk about in other videos. If you guys want us to talk about any altcoin specifically, drop it in the comments below. But look at others right here. We see this major support for this A wave. There's the B. Here's the C all the way down here. And so the A wave is always this drastic first initial sell-off to create a neckline support. The B wave is really just a lower high or a higher high than the first high of the starting point of this sell-off. And then once we see this B wave in, this acts as a level to look for when the price chart finally breaks back out after finding a low and working our way through this range. So you can see we work our way back up. We get rejected from this neckline, which is the A wave right here. It's the same thing all the way back here. We see A, B, C. We work our way back up to this neckline right here, even right here as well. We get rejected from it until we coil up to it, and then we break out through it. So what's happening now is we're coiling up to it, we're sitting on top of it, and we're attempting a real true break through it to then retest these previous levels that we were at like $400 billion at the B wave. And then ultimately going beyond that, like what happened all the way back here, we would want to see others go all the way back up here to $490 billion to this previous high. That's what I would want to see, the others just to absolutely erupt. And then that's when, in my opinion, Floki is going to be breaking back out to its all-time high and eventually going all the way up here to where we were at back in June of 2024, November of 2024, at these levels all the way up here. That's where I'd expect there to be a major move in the market at the exact same time that others is breaking out back to the previous high. And before that happens, you guys need to be prepared, because you do not want to be buying up at these levels right here after the breakout is already done. You want to be looking for the best projects to accumulate while we're still down here. And that's what our research team is going to help you find. They've called some of the biggest projects of the past few years. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1, 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. 1,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.